Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined this week by Paul Strome and Nicole Dines in a week that marked the 6th anniversary of the Brexit vote. Let's start with you, Nicole. What have you been watching?
Well, Real Asset Media held a briefing in London, an in-person briefing and outlook, looking at prospects for the second half of the year. And our experts agreed that 2022 started really on a high with lots of market activity and a sort of post-pandemic rush of optimism. And then, as we all know, the war happened and inflation and energy prices and interest rate rises. So things have, the picture have changed dramatically. As Stefan Bundrak of Nuveen, the head of real estate research in Europe, said the market has changed more in the last 6 months than it had in the last 6 years. And real estate market are slow to adjust. So he said investors are now working out what is happening. So there's very much a feeling of sitting on the sidelines and waiting to see what happens. As Wundak said, there's less of an incentive to be active for investors because there's an expectation the prices will actually be lower in a few months' time because the real estate prices have not adjusted yet. So there's a bit of a lull in the market. That's on the negative side. And Wundak said, but that it should be a good time to strengthen business relationships, to be ready to pounce when the music starts playing again, because everyone agreed that there's still a lot of capital out there. There's still a lot of willingness for investors to invest in real estate. So it's just a question of waiting when the right moment is. And Assem Al-Alami of Berlin HIP said that investment activity will come back towards the end of the year. So the last quarter is expected to be, hopefully as good as the first in this year. And there's agreement also among our experts that two sectors in particular, logistics and residential, are almost recession-proof. They will continue to do well. They will continue to attract capital. And residential in particular, because they said there's such depth to the sector now. It has so many sub-segments that investors can pick and choose. You get from build to rent to senior housing to student living. So a big range, lots of opportunities across Europe. So a difficult start to the year, difficult first 6 months, but a bit more optimism for the second half of the year.
Yeah, I thought it was interesting as well, Audrey Klein saying that investors were still looking at the sector, but very much focused on those defensive asset classes of living and logistics. And David Inskip of CBRE Investment Management also highlighting areas like affordable housing. There was also general agreement that ESG is a major trend and it won't be derailed by current political and economic crises, and potentially is one of the major guarantees for the resilience of an asset going forward. And so in some ways, even more of a must-have. Paul, what have you been tracking?
As you say, anecdotally, there's no apparent absence of capital for real estate. And obviously part of that is its characteristic as a hedge against inflation. And this week, the UK arm of Hong Kong listed developer Guangzhou R&F Properties agreed a new £770 million plus financing package, which will enable it to complete development of the 19 Elms project in London on the south bank of the Thames. R&F is also the developer behind the adjacent Thames City in 9 Elms, which is a partnership with CC Land, and the first residents of that due to move in next month. 19 Elms comprises 2 towers, a 57-storey city tower where there's 330 odd residential units, and those are for sale. And then the 42-storey river tower, which will provide a 5-star Park Hyatt hotel and 103 Park Hyatt branded luxury apartments. The development is up to shell and core stage with fit-out work to be carried out, and there was a pause in construction earlier in the year. It was originally scheduled for completion this year, but lead contractor Multiplex's new target date is November next year. The consortium of lenders putting up the finance package includes funds managed by Apollo Global Management, Carlyle, Crosstree Real Estate Partners and Précy Capital Partners. Guangzhou R&F Properties chairman Li Shi Lim said that under the current financing market backdrop, the deal is a testament to the quality of the development, and he attributed it to the strength of the London residential and hotel market too. Also, in the last week, Airmont Capital sold a substantial stake in Amsterdam headquartered company, the Student Hotel, to Singapore's sovereign wealth fund GIC and Dutch pension provider APG. This student hotel is a company founded by entrepreneur Charlie McGregor, who opened the first hotel in 2012. We're not being told how much GIC and APG are putting into the company, only that the deal values it at 2.1 billion euros, and that includes developments underway. GIC and APG, the latter already had a stake in the student hotel, have also both committed to additional investment in order to accelerate international expansion. The student hotel will now expand into key European cities, and it wants to expand to 50 hotels. At present, it's got 15 hotels operational, with 3 more scheduled to open this year: Madrid, Barcelona, and Toulouse. 7 more will open in 2025. The student hotel's got a hybrid hospitality model, which combines student accommodation, hotel rooms, co-working and meeting spaces, which enable it to flex between business, leisure and student demand during the pandemic. Lastly, another reminder that the markets are looking to the inelasticity of demand driven by demographics in certain sectors was Munich headquartered Kingstone Real Estate's launch of an open-ended healthcare fund, which is targeting a volume of 400 million euros. It has kicked off the fund with the acquisition of a 70-bed nursing home in Dettenheim in the Baden-Württemberg region of Germany. The deal and the fund is just another example of the emergence of healthcare as one of the alternatives to offices, shops and sheds.
Yes, the healthcare side is really interesting at the moment. And looking at the student hotel, it's remarkable the changes over the past 10 years in terms of student housing becoming an institutional asset class, helped, of course, by the class of 2020. And it'll be really interesting to track the Senior Housing and Healthcare Association, just in terms of those growing levels of interest by institutional investors. And I had an interview actually with Michael Walton of Rinder Property Investors this week, and they've switched focus almost entirely to care homes and senior living. And so it's just interesting to see some of that change in the market. I also noticed Immo Finance announcing a change of strategy, including a €1 billion sell-off to prioritize high-yielding assets following the majority takeover by CPI Property Group. And a number of stories again this week on the ESG side, with CBRE buying French ESG firm Green Solus to increase its European coverage. And as well, of course, as last week's Crown Estate allocating $1 billion to reach global net zero. We also saw companies like ECE planning to cut carbon with plans for photovoltaic panels on their centres. So a lot of movement in all of those areas. Thanks very much, Paul. Thank you, Nicole. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the real asset markets.